Hello everyone, welcome to today's weekly market insights. Now, as we come across to the calendar, we look at a relatively busy economic calendar this week. We look towards the central banks. We had the RBA, the Reserve Bank of Australia, out on Tuesday. On Wednesday with the BOC, the Bank of Canada, and on Thursday with the ECB, the European Central Bank. Now, as we come across to Australia, in Australia, the RBA decided to reduce the amount of bonds that they're going to purchase, reducing it from 5 billion Australian dollars down to 4 billion Australian dollars per week. And they have also decided to extend the duration that they are going to buy bonds for. So one hawkish statement, one dovish statement kind of cancels each other out, and nothing really changes in regards to that. The Bank of Canada last month, or their last meeting, should I say, they decided to reduce asset purchases, reduce their bond buying program from 3 billion Canadian dollars a week down to 2 billion Canadian dollars a week, and had communicated with markets relatively clearly that they were going to do this at every second meeting. So now this meeting this month on Wednesday was a non-event. Nothing really came out of that of any interest. They stuck to the plan that they are going to reduce asset purchase at every second meeting. Today was Wednesday, this week was in the middle of those two meetings, so nothing really expected there, nothing changed, and we move on from that one relatively quickly. And we go to Thursday then, the ECB yesterday. Now the ECB was, pretty similar to the RBA on Tuesday. We were looking for guidance on how the ECB are going to act going forward. They decided to raise expectations for inflation for this year, next year, and 2023, to increase economic growth projections, to increase inflation expectations going into the future. Now they also adjusted the PEP program. They initially, the plan was designed to purchase $1.85 trillion. Now they are going to keep to purchasing $1.85 trillion, but they are going to reduce the amount of bonds that they are buying each week, but they are going to increase the duration that they are buying bonds for. Exactly the same as the RBA on Tuesday. Two very similar opinions from the central banks, and we'll see how that goes moving forward. Now, as we come across to the indices page, we did have a sell-off across US indices. We had a sell-off on the S&P, we had a sell-off in the Dow. Didn't really have a sell-off in the Nasdaq. I mean, if we blow these charts up and look, we've had such a bull run over the last number of months, over the last year, 18 months since COVID first came about. Even if we just look at the chart, this sort of area here, from here to here, we can see clearly that this uptrend was losing a bit of steam during the week. So we were kind of expecting a bit of a pullback just from a technical perspective. We've had such a bull run lately that a pullback is only natural. A bit of profit taking, a bit of mean reversion is only natural when you're looking at charts like this. We did get a bit of a pullback. It wasn't a great sell-off. It wasn't too much to spook investors. The reason behind this sell-off was put down to the rising COVID cases across America. Now they are having 300,000 cases a day this week. The COVID situation across America is not good at the moment. The vaccine take-up is not where the American government would hope it is. Just below 60% of people in America are fully vaccinated, I believe. If they want to achieve herd immunity, get rid of COVID, and move forward with full economic growth into the future, they are going to need a few more people vaccinated on top of that, I believe. The main sell-off this week, as we come across to the FTSE, this move here you can clearly see was due to the fact that in the UK, Boris Johnson has decided that he is going to raise taxes. He laid out plans on Tuesday that he is going to increase the UK's national insurance levy by 1.25%, and also going to raise taxes on shareholders. Now, the move was facing resistance by some lawmakers, even in Boris Johnson's own Conservative Party, who fear a tax hike could cost votes. Which, if you're an average Joe in the economy, paying taxes and your taxes get increased, I don't think you're gonna be best pleased, especially when the Conservatives promised that taxes would not go up before they got elected in 2019. So we'll have to see how that plays out into the future. As we come across back to the calendar, as we have a look towards next week, I'll just get the calendar for next week here. Not a great deal. I mean, we do have a couple of things out. We've inflation out of Canada, we've inflation out of the UK, we have employment out of Australia, but the main focus next week will be on Tuesday at 1:30 London time on inflation figures out of the US. It remains to be seen, how high inflation is, whether inflation is dropping compared to where it was a couple of months ago. If expectations for inflation over the rest of this year will drop a bit. The ECB yesterday said again that inflation is going to be transitory. Gave reasons for inflation to not to not overshoot too much, to not get out of hand. The American Central Bank are sticking to the same script as well by saying that inflation is transitory. We will get another opportunity to make a decision on that on Tuesday. That'll be the main focus for next week, and we'll speak about that next week. And please do join us for another weekly market insights.